Hello, this is David at My Time to Retire, where I focus on building my investment portfolio to where my wife and I can retire early. Just about a week ago, I tallied my net worth and shared it here online. I checked my net worth every month at the beginning of the month, and today I did make some small changes. In this video, I provide a little explanation on some of my holdings and let you know what stock I liquidated and what stock I purchased today. This is a spreadsheet with my holdings. It just recently crossed the $2.7 million mark. Based on the market's performance the last couple of days, it should still be fairly accurate to the current balance. Over 20 years ago, I started investing in mutual funds. Most of those beginning funds I still have today. These funds have been on my mind recently, especially here, these funds in my Roth account. As you can see here, this category here of mutual funds, about $459,000 in total in these funds. There are also mutual funds that we have in our 401ks accounts, but these funds I have broken down into non-retirement, pre-tax retirement, traditional IRAs, which I have under my category here. My wife doesn't have any traditional IRAs. And then we have post-tax. These are pretty much Roth IRAs. My wife's account, and then my account for the Roth. Some of these accounts here are fairly old, and I'll kind of go over a few of those. And I'm looking to maybe make some changes here in the future with these accounts. One thing I want to point out is that every year we are no longer able to contribute to Roth IRAs, but we do contribute for my wife into her IRA by doing a backdoor Roth conversion. We're able to contribute a non-deductible IRA and then convert that over to a backdoor Roth IRA. I'm kind of unable to do it in my accounts because I have these accounts here which would become taxable. And since my wife doesn't have any of these traditional IRA accounts, it's much easier to do it for her without generating or creating any tax burden for us. But these accounts here I want to kind of look at today. The balances, are kind of modest compared to the rest of the portfolio, but I'll kind of show you why that's the case. This is the T. Rowe Price New Asia Fund. This is a fund, my very first fund, that I started investing in 1997. As you can see, the first investment was about $2,000. Didn't perform too well at the beginning. It took a few years before it started to get some growth. There's some contributions here as I continue to contribute to traditional IRAs. And then this little jump here was when I left one of my first employers that had a 401k, and then I was able to roll that over into a traditional IRA. Now, if you notice, this New Asia Fund is no longer a traditional IRA. This is a Roth IRA, but it didn't become a Roth until about 2005, I want to say, right around that time. I actually converted all of my traditional IRAs to Roth IRAs at that time. I'll probably make a video about that, my experience doing it, but I was able to convert all those with paying virtually no taxes. When you convert a traditional IRA to a Roth, you take that money as income, it's taxed as income, but I was able to prevent paying tax on just about all of that money, and I'll kind of go in detail in the future in a video about my experience doing that. This fund, this New Asia Fund, what brings my attention to it is just the performance. This has not performed well last 4 years, even before. As you can see, in the past, it had performed pretty well, quite volatile. I had pulled a lot of money out of this account right here around this time, 2010, 2012. That's when I started shifting my strategy. I had, I think, enough money where I could then shift my focus from mutual funds to individual stocks. But you can see, I've held these funds through large downturns, and I had tapped this mutual fund and others as well to kind of fund my transition into individual stocks. Something I want to point out, while this balance here is maybe what, $5,000-6,000, the cost basis is actually negative 20,000 because of how these have performed and how I have been able to draw more money out than I've actually contributed into them. But this performance here of late makes me think that I can, deploy this money somewhere else that'll be more beneficial. Another fund, Global Technology Fund. Of late, it hasn't done too bad. Technology is really where I've gotten a lot of the growth in my portfolios through this mutual fund or through individual stocks. Excellent performance all the way up until, I guess, COVID really. Has not recovered as well as some other investments have post-COVID. But one thing I'd like to point out is, I started this fund at the worst possible time. $2,000 investment. My IRA contribution for the year in year 2000, it crashed right along with the dot-com bust. I consider myself a buy and hold investor, and this is really the proof of that. I held that fund for more than a decade before I saw any growth. In fact, all the way here, about maybe 2007, this is when I doubled down, added more, again, added more. And then here, this was the mortgage crisis, 2008. This is when, again, more of a depressed market. And then it really took, more than a decade before I saw any green in this fund. And as things started getting better, then 2012, that's when I started pulling money out to shift to individual stocks. After that, it performed quite well, continued to grow, pulled more money out, and then it had an amazing uptick here, and then a major correction. Again, holding all throughout, and this little bit of a recovery. This stock fund has done fairly well of late. I think if you look at what my actual performance for this entire fund, it is probably not too good just because of how long I've kept it. I think I have a 8.64 compounded return over the last 24 years. And, considering that there was no growth for the first 10 years, that's what really kept it depressed. I think if you look at the performance from 2012 and on, it'd be a much different case of how this is done. But again, this is something I'm looking at maybe tapping to go maybe more into dividend paying stocks, more towards something geared towards supporting us in retirement. Another investment, all cap opportunities from T. Rowe Price. This fund has performed very well. It wasn't always called all cap opportunities. I believe I was in another fund that they then combined at some point to make this fund. But this growth that you see here, it is pretty much 15.75% compounded growth from inception to then. So in 2020, I pulled more money out. Again, it's just moving it over into a different investment. Most likely, I put it into individual stocks. But this one I'm fairly happy with. And I have to say, T. Rowe Price, I have been fairly happy with with it. A lot of people ask, or if I talk to people, and if I were to recommend people starting out, I do recommend Vanguard, index funds, especially starting out. This is how I happen to start. But, these stocks here, there is more of a cost associated with them than you would find in maybe a Vanguard index fund. Something to keep in mind, when I first started investing, I was making $12, $13 an hour. And you can see those years here that I had, no growth, and then, my income here, which I certainly will share maybe in a later video, but, my income, for, age 18 until age 30 was probably really never over $40,000 a year. And even with this suppressed growth that I've had in a lot of these investments, I still have been able to become really a multimillionaire from 2009 on. Just something to kind of point out. Mid-cap growth fund, another fund which has at times performed very well. It's kind of flat a little bit. if you look, again, I'm pulling money out. The cost basis here, again, is, in the negatives. I have in this fund, my balance is just under $10,000. But in this mid cap growth fund, I have in other accounts, in non-retirement accounts, and in total, I have probably about $110,000 in this fund. And I continue to contribute every month, especially into the non-retirement account. Should I take some of this money out, deploy it elsewhere? Those are things I'm kind of considering. One thing I want to point out right now and today is some of the changes that I made in the portfolio. Lyft stock. This stock you see here, I have $564 in the stock. It's a bit of an anomaly with a lot of the other balances. I bought Lyft in May of 2019. I put about $2,300 into the account, a little bit more, and it's lost more than 75% of the value. It has performed poorly. Again, I've been in there for more than 4 years, and it's time for that to cut my losses there and to sell and to move on. I have Uber. I've had Uber for a lot less time. It's done, phenomenally better than Lyft. And again, I started a lot of these stock positions with $2,000-$3,000. So really, it caps my losses at that $2,000 or $3,000 mark, where a lot of the stocks that I've invested in have done much better. Multiple 10x plus growth. So on the downside, investing a small amount, I'm certainly limiting my losses with the potential of going much higher and doing well. And I have been fortunate that a lot of the stocks that I have invested in have done well. Again, I tend to buy and hold, which means a lot of times I hold these stocks until they become, really worth a lot less than they should have. And I should have probably sold this one a little bit earlier. But today I liquidated it, sold it, and I'm going to move that $500 somewhere else to give a little hand. Matterport, another stock that has done poorly and lost a lot of money in. And then there's Valaris, which is down a little bit. I made some changes today, which I'll kind of get into. Matterport, they do 3D imaging. It's a tech stock. They work with spatial data. And I think this sector has a lot of potential. But as you can see, I'm down 71%. I've been in this stock since 2021 and down over $2,000. Am I going to sell this? No. If you take a look here at the way this is broken out, it is trading at a 2-year high now. Beginning of the year, it had a major shoot up, major increase. Gives me some optimism that it's going to perform better. I really don't want to put more money into this stock, but I'm willing to hold it. I don't think I'm going to recoup my losses, but I think in the short term, this stock will probably perform better than maybe an alternative investment for me. It could easily go up 30% in the short term, but I don't expect it to go, the hundreds percent needed to recoup these kinds of losses. And I'm really not that interested in doubling down as of now. Maybe I should. I don't know. Tell me what your thoughts are. Maybe if you're invested in there, maybe, recently, maybe hopefully you've done better in this stock. But I think I'm going to hold off touching this, just let it ride, see where it goes. The other stock, Valaris, as of about a week ago, had about a $6,000 balance. Today, I bought another 100 shares. I've only been in this stock for about a few months, beginning of this year, and I'm down about 17%. This is an oil and gas stock. They provide, support for offshore drilling, and they provide provisions. I'm sure with the storms heading through the Gulf, that is really suppressing the stock. I put more money in today. I'm hoping that this will improve. Again, I have no idea what these markets is going to bring, what these stocks are going to do in the future. Don't take my advice. Again, I have an associate's degree in a field not associated with finance. And I'm just trying to share my experience, maybe try to encourage people, and really to kind of be on here to exchange ideas and get some new ideas. YouTube has been fantastic learning venue for me, and I really want to engage and look for opportunities and really put my portfolio out there for criticism. I'm certainly very critical. This is really a hobby for me. I definitely have a full-time job, but if I can do this, just about anybody can. And I'm really optimistic about the future. And I'm really trying to meet these goals that I've set for my family. And I'm willing to kind of expose this here to people, to criticism, comments, and maybe to a little bit of help as we move closer to that goal. That goal of mine, I want to reach $3.3 million in 2 years. Can I do it? We'll see. I'm hoping. This shows here Valaris, today's balance after putting over $5,000. Still down 17% today. It was down 2.78%. We'll see how it does here in the short term and the long term, but this is probably a stock that I'm going to hold for a while. And most stocks I do hold for a long period of time. You can kind of see in some of these other funds here or stocks where I'm sitting at. Ulta, it's another one that I bought recently. I'm down, I have about $8,000, but again, I'm looking more long term. I've only been in this stock for literally a couple months, and I'm kind of optimistic about it, and we shall see where that takes us. One issue that I have, one thing that is on my mind is this top section here. These are pretty much money market funds, cash. They have about $107,000 sitting in cash. This money I need to deploy. I need to start putting to work towards that goal that we have. And I usually don't carry this much cash. Recently, I sold Bank of America. It was a position I've held since before 2008, where really I started buying it around $10 a share, and I bought it all the way down to about $6 and some a share during the mortgage crisis, pretty much. And I've held it ever since. Only since Warren Buffett started liquidating his Bank of America position, I kind of followed suit, and I started to pretty much sell, and I liquidated my entire position over $60,000, and that's where the majority of the money comes from in this $107,000. Bank of America, with the banking issues that have happened in the last few years, with the interest rates, it hasn't performed very well. It had for many years not even paid a dividend, and then started paying a dividend. It was paying a good dividend, when I had about $60,000 in there. But the growth really wasn't there compared to a lot of the other stocks that I benefited from. So when Warren decided to liquidate Mr. Buffett, I followed suit, and I'm sure he has plenty of good reasons, and his reasons are good enough for me, and I'm ready to look for another instrument to put that money into. Again, this is just a quick summary, a little bit of an overview, some of my thoughts of where things are now. There's a lot of other things that I want to address, want to maybe put up for discussion, for criticism. And I really have benefited a lot from YouTube. This is definitely a hobby for me. This is really something that I spend a lot of time on. I have a lot of data that I've tracked over the 20-some years, and I'm willing to share it. And I hope to encourage others, because this is something that everybody needs to do. They really need to invest for their future. And I'm getting to that point now where I want to start to benefit from this portfolio that I've built. I've lived a very frugal life, still do, and I'm looking to transition from working to early retirement. And I'm hoping to get to that $3.3 million mark, and I'll discuss a lot what my plans are, how to draw down, how to structure this, how to live off of these dividends, how to access these retirement accounts before I hit age 59 and a half, because that's something I'm going to have to do. There are ways to do it, and it's going to be a process, a learning process for me. And I'm kind of opening myself up to scrutiny, criticism, and to getting help, because I know I'm going to need it as I try to anticipate problems that I'm going to have, challenges. And I've, again, love learning from other people's experiences, and I feel ready to kind of share my experiences as I kind of start this transition and hopefully reach those goals in 2 years. So again, this is David at My Time to Retire. Please subscribe. Bear with me as I'm learning the ins and outs of YouTube, and I hope to bring more videos, more content, and maybe some value to people. And I'm looking forward to the exchanging ideas and tracking my progress here on this account. Thank you.